Hello everybody, welcome back for another video. Hope you're all doing well and that you are all having a great day to start things off. According to a study conducted by researchers at the Imperial College London, cryptocurrencies possess the potential of becoming a widely used form of payment within the coming decade. In their research report titled Cryptocurrencies, Overcoming Barriers to Trust and Adoption, Imperial College London's Professor William Naughtenbelt and Imperial College Business School's Dr. Zeynep Gurguk argued that so far cryptocurrencies are already acting as a store of value just like fiat currencies. However, cryptocurrencies are yet to effectively serve as units of account or mediums of exchange in order to satisfy the last two functions, just like fiat currencies currently do. Bitcoin, as well as other cryptocurrencies, will be required to improve in various areas, including design and scalability. At the moment, for instance, a big number of cryptocurrencies are built on blockchains which are not designed to handle high transaction volumes. There was actually something with Vitalik Buterin yesterday. It was quite interesting. I don't remember exactly where I read it, but pretty much he said he wishes that he could, like how hindsight is 2020. He wishes he could go back in time because he sees that there are some faults in Ethereum, and he wishes that he could kind of patch them up or make it so that the platform is a lot more scalable than it currently is right now without having to rely on updates to speed it up. Additionally, cryptocurrencies will also have to adopt more user-friendly designs to make them usable by those who do not possess specialized knowledge of them. Price movements of cryptocurrencies will also have to stabilize and become less volatile if they are to be widely adopted. Having a standardized regulatory approach across the globe will also assist substantially. All of these are correct. I don't agree with the regulatory side, but we know what's happening. We know it's here. We kind of have to deal with it. Price movements has also been spoken about by many people in the industry, saying that they believe that cryptocurrencies at some point will actually stabilize themselves, whether we want them to or not. A lot of people who are getting into the cryptocurrency space, especially those who are day trading, say that they like the volatility because it's great for profits. Anything that goes up and down 4%, about 10 times a day, you're making great profits off of it. But eventually, it's believed that sometime around 2025, possibly 2030, can't believe we're already in 2018, that the market will have stabilized so much because there will be so much money in it. So major fluctuations will be a complete thing of the past. And at this point, it will be then viable for Bitcoin and other cryptocurrencies. It's kind of what we're seeing right now, where you see the prices are completely going sideways. This is happening because of manipulation, not because of stability. But this exactly what we're seeing right now will eventually be an everyday occurrence. So it kind of leads us to, we will at some point see Bitcoin be completely stable to the point where we can buy something with it in a store, and then 1 week later the price is almost exactly the same because of how stable that it actually is. With these improvements, according to Naughtenbelt and Gurguk, it will be possible for cryptocurrencies to herald a new technological dawn with regards to how money is spent. The researchers from Imperial College also noted that every time money evolved, say from cowrie shells and other objects of values to coins and notes, there has been a reduction in payment friction. Per the researchers, cryptocurrencies could serve to reduce payment friction in the global economy. They said the world of cryptocurrency is evolving as rapidly as the considerable collection of confusing terminology that accompanies it. These decentralized technologies have the potential to upend everything we know about the nature of financial systems and financial assets, wrote Professor Naughtenbelt. This is completely true, and this is part of why I don't get sad, but I know a lot of people are very discouraged when they see what's happening in the market. Like, believe me, I understand. I also have money in the market, so when things flash red, I'm also part of this red. But a lot of people are leaving because, or a lot of people have gotten into the crypto market because they only see dollar signs, if you will. They see exactly what's happening immediately before them. No one is looking at the 10 years down the line. In 2009, no one was looking at 2018, where we are now in regards to Bitcoin and Bitcoin's prices and exactly how the market would evolve. Like I always say, I cannot and will not ever tell you what to do with your money, but please always do your research. There's a reason why I'll tell you a bit more towards the end of the video as well. It'll kind of make sense where I'm getting at, why all of this is happening and why there are universities around the world who are doing research on cryptocurrencies and why they care and why there's so many predictions about what exactly this is going to be, because the entire the crypto market, the crypto prices, everything about it is incremental. So what we see now is a result of what happened in 2017. What has happened in 2017 is a result of what happened in 2016 at all. It is quick and slow. We know that the crypto market moves relatively fast, but a lot of the growth seems very slow to a lot of people, and they don't really understand what is happening around the world. I know I definitely have seen people in the comment section. I've seen your comments. I know a lot of you do understand, but like I said, I don't get sad, but you do not want to be one of those people who has sold all of their cryptocurrencies, especially now because you're discouraged. If you need the money, by all means, please go for it. If you have bills to pay, I totally get it. But don't do it because you don't see the long-term prospects of it. People who sold Ethereum last February when it was around $12, and then where they are now, there's a huge, bright future for this. If you, like I always say, do your own research if you have the time. Like really, read what universities are saying about it. What like well-known economic professors are saying about cryptocurrencies and where they see the space going in a couple of years, because you do not want to be one of those people in the 10-year period who is saying, yeah, I had about 35 Ethereum, but I sold all of them for relatively pennies to compared to what they are now. Didn't mean to spend too much time on that, but always look at the long term, because, you know, it's 2018. Where were you in 2008? Completely different space than where you are right now. So who knows where you will be in 2028. Like I said, didn't mean to spend too much time on that, but it is something to think about. Next up, still staying inside the UK. For the first time, the UK's financial regulator is recognizing the potential of blockchain-related startups for the latest and fourth cohort of startups for its regulatory sandbox. The country's Financial Conduct Authority, or the FCA, has given access to 11 blockchain and distributed ledger technology-related companies, almost 40% of the 29 accepted. The regulator received 69 applicants in total, of which 40 did not make the group. According to an FCA announcement last week, the regulator said, and I do quote, "We have accepted a number of firms that will be testing propositions relating to crypto assets. We are keen to explore whether in a controlled environment consumer benefits can be delivered while effectively managing the associated risks," end quote. Most notably, perhaps 20-30 of the 11 fintech firms will be partnering with both the London Stock Exchange Group and Nivora, a London-based financial service company, to build a DLT-based platform to allow companies to raise capital in a more effective and streamlined way, according to the description in the FCA post. The platform will reportedly facilitate the primary issuance of an equity token based on Ethereum to investors. They said the next big step will be to offer secondary transfers, where then we can work our way to the capital stack to reinvent private equity and public markets. This was said by Tomer Sofinzon, who is the co-founder of 2030. So it seems like a lot of countries are starting to get ready with their sandbox thing. I don't think India has one. I think Hong Kong has some type of a sandbox thing. I think Japan also has one, and we know that Russia also has one. I don't care for them, but I think if it's a way for governments to get friendlier or to accept that cryptocurrencies are a thing, then kind of, go for it. It's going to be interesting to see exactly what forms from these sandboxes, because one of the major things against sandboxes is pretty much if you have someone looking over your shoulder every single day trying to figure out what you are doing, it kind of puts you in a different place mentally, because you don't have the capacity to be as creative as you would like to be in the project that you are doing. But at least this will lead the way. I don't accept these sandboxes, as they are called, to last forever. I think eventually, after 5 or 10 years down the line, I think a lot of governments, like I've said before, are so uninformed as to what cryptocurrencies are, what crypto assets are, what distributed ledger technologies are. They literally have no idea. So I think you will have to sit in front of them for quite some time and kind of literally show them as if you were a child exactly what all of this is. And I think along the way, they'll become a bit more friendly to it, but at least 29 were accepted. It's better than just 3, which has happened in, I think it's not the Philippines. I can't remember exactly what other country. I think they allowed like 3 companies out of like 300 who applied for it, and they said, no, we want to do it this way because we want to, they literally want to stand over their backs. They want to have like designated people who are from the government walking around the room as these people are typing on a computer. It's kind of intense, but it's kind of where we are right now. Governments are trying to wrap their head around cryptos. So this is why we have sandboxes. Next up, Ontology is actually in the news today. Ontology, a new high-performance public multi-chain project and a distributed trust collaboration platform, has announced the launch of Ontology 1.0. Ontology 1.0 provides new high-performance public blockchains that include a series of complete distributed ledgers and smart contract systems, and at the same time supports public chain customization and chain network collaboration, whilst providing common modules and various distributed applications. Public chain basic services, high-performance customizable blockchain framework, and protocol groups are the 3 key components of Ontology's infrastructure. Ontology 1.0 includes a decentralized identity authentication protocol, distributed data management protocol, and credit score protocol. I did not know about that one. At the same application level, the integrated client product, or ONTO, trust service engine, and distributed data exchange framework will provide strong technical support. Ontology 1.0 is the first decentralized smart contract execution platform with identity. The first version of the core chain reached over 5,000 transactions per second without performance enhancements. Enhancements will be added in the future. Regarding security, there is continued deep cooperation with the NCC Group, Baimahui, and Slowmist to ensure the security of Ontology's nodes. Ontology 1.0 can provide complete smart contract support and tool package for smart contract development. We do not hear or basically at all about Ontology. I thought this was significant because they have officially launched, if you will, but this is yet another platform that says or has claimed, I'm not refuting the 5,000 transactions per second. It is what it is. But this is, I think, the 6th coin that has officially launched. I don't know if any of you out there actually have Ontology. I do not have Ontology. Said before, there are far too many coins to buy. As much as I would love to have unlimited funds, it is impossible to spread my money throughout every single coin. Ontology has pretty much gone under the radar or unnoticed by a lot of people. But like I said, this is now the 5th and or 6th coin that has launched, that claims to be quicker than not only Bitcoin, but also Ethereum, quicker than XRP, quicker than EOS, and also a smart contract platform. Because I told you guys before, the only way now to remain relevant in the cryptocurrency space is to have some type of smart contract platform that you can say is better than the other ones, and also the quicker transactions per second. I'm all for competition, like I really am. I hold a number of the not even top coins, like the more talked about coins during the last year or so. But if Ontology can push to the number 3 or number 2 or number 1 spot, go for it. I will cheer you along the way. I just want to see some type of movement in the market. Everyone keeps claiming that they are better than coin ABC or XYZ, and just kind of waiting for the movement to end up happening. Next up, BitGo is in the news. The wider world of crypto tokens is becoming a bit more accessible to institutional investors. The security startup BitGo exclusively told CoinDesk on Tuesday, July 10th, that it will expand its suite of custody products and services to support 57 new Ethereum assets, a move driven by demand for services that safeguard private keys, which are the alphanumeric strings that act as passwords for crypto assets, and that once lost are gone forever. As such, the move is a telling one for the blockchain security sector, one that showcases how it's in the midst of a changing competitive landscape. Founded in 2013, BitGo has become an industry leader managing wallets and crypto exchanges, but to date, its service has been limited to larger protocols like Bitcoin and Ethereum. Indeed, the overall lack of options has even led traditional custodians like BNY Mellon, JP Morgan, and Northern Trust to consider the business, sources told Bloomberg in June. The startup is hardly the only upstart rushing to debut institutional custody services. U.S. exchange provider Coinbase, the Swiss startup Smart Valor, and Japanese bank Nomura are just three of the companies rolling out licensed crypto storage solutions. Yet the addition of Ethereum tokens could be a key first move advantage. According to BitGo CTO Benedict Chan, there has been a surge in demand for custody solutions for alternative crypto assets such as its kind is now adding. I won't read the rest of it. It's kind of, they go on the same, and in the end, the CEO, CTO, whatever you want to call it, ends up talking about how great it is that they're adding more tokens. They don't say exactly which tokens they're adding, but they say 57 new ones. So I assume it is going to be the top ERC20 tokens. You can actually find the list. There's, I think, actually over 1,000 ERC20 tokens that have been built on top of Ethereum. But there's also a list of them, and you can categorize them, I believe, by highest in, not daily volume, what's the other word? Market cap. There we go. And you can see, you can probably ascertain from this list exactly which ones they're probably going to be adding. One of the things that I think is kind of weird when it comes to the cryptocurrency space now is that everyone is just focusing on the institutional investors, but more so it has to do with security and custody. I didn't realize how many, I guess it kind of makes sense. When you've been in the cryptocurrency space for a while, you kind of know what a private key is. You know how to transfer money. You know where to kind of more or less put your coins. You may have a nano ledger. You may have a this. You may have a that. You may know how, have a safe spot where to put your coins. But custody is actually one of the really big things, and I didn't realize that this was such a major thing. This is why the entire Coinbase thing with them launching their Coinbase custody service is like such a big thing in the news, because a lot of rich people don't want to do anything themselves. They want a company to pretty much say that I have your back. I will do this 100%. You don't have to worry about anything. I think kind of comes down to so that if they end up losing their money with this company, that the company then kind of takes the fault. But yeah, this is a major thing that is slowly happening. I think it's great in general. I don't even care about the entire custody or institutional investor aspect of it, even though this is mainly who BitGo kind of deals with. But I like the support for the new 57 tokens. There was also some other news that I don't think I added it in this video. I don't think I did. There was some other company. I think they're adding also like 10 other coins, and they're going to be adding, I think XRP, LTC, not OmiseGo. I think EOS and something else as like trading pairs. And I'm like, finally, this is exactly how it has to be. I think as we continue to go forward, I'm sure you're noticing more news about more companies adding additional tokens and not just support for Bitcoin and Ethereum, because I'm sure they're getting so many. That's why I told you guys before, I was like, if you have a crypto exchange that you really love or that you're using all the time, but they don't have the crypto pairings that you want them to have, just send them a message. I've sent so many messages to, I think, the 3 exchanges that I actually use, and I tell them, I didn't tell them. I suggested, I'm like, hey, can you please add pairings to this? And they actually ended up adding pairings about 2 months later, because I wasn't the only one sending the messages. The crypto market will only expand if we want it to expand. So don't be afraid to send messages to people who are holding your coins if you're using them on exchanges, because they will listen to you because you are a customer. Right. Didn't mean to spend that much time on this, but this is something very important. This team looks very happy when you look at the photo. I didn't look at it the whole time. Anyway, OmiseGo is in the news. Ethereum-based mobile operating system Status has announced that it is partnering with OmiseGo, a network providing financial inclusion and interoperability and plasma scalability research to advance the Web3 ecosystem. According to an announcement, the partnership will see Status and OmiseGo work to ensure seamless integration of the OmiseGo network's decentralized exchange called DEX, or DEX, where Status will enable interoperability and transactions across multiple blockchains. They will also be working on scalability research. This is very important. The two have had a close relationship, which was further cemented in June when Status revealed that it had joined the Ethereum Community Fund, or the ECF, as a founding member. The ECF has been conducting research with the aim of mapping out compatibility or complementary platform-specific grant programs, including Status projects, which are dedicated to the advancement of larger Web3 decentralized ecosystem. Okay, I'm sorry, I have to say this. It's literally like the elephant in the room. When I'm reading this, I know you guys obviously can hear me making the mistakes, but some of you who are reading along, I know it's not just me. These words are very weird, right? Like it's not that I'm apologizing, but like you have to, I've never seen larger Web3 in a sentence before. I don't know. When I read through these things and I look back, I'm like, it's not just me. Like these are very weird words. I think we're only used to seeing like plasma and interoperability and OmiseGo in a sentence because this is kind of what we talk about all the time. Whatever. I mean, you know, these words are weird. I know it's not just me. Anyway, additionally, the two share a vision that the world should be more open and fair through the Ethereum blockchain. In a blog post in March, Jun Hasegawa, who is the founder and CEO of OmiseGo, said that the cryptocurrency ecosystem has grown a great deal in the past year. As a result, it has brought wealth to many people and organizations. Hasegawa also believes that this presents an opportunity to share that wealth. At that time, OmiseGo and Ethereum donated $1 million to charity. The latest partnership will see OmiseGo focusing on building open infrastructure and open financial tools, while Status will pay attention to putting these tools into the hands and pockets of people around the world. Status are also of the opinion that decentralized exchanges will see a shift away from current social systems and towards the use of cryptocurrencies in a global economy. We don't hear too much about the OmiseGo team or OmiseGo at all. They said that they do not want to give out tons of news as to pump the price when they have something going on. I don't think ever really hear about Status at all. So the partnership itself is actually very interesting. Plasma is still at the forefront of everything that is happening right now. As of now, this is apparently still slated for Q3. That is now until around October 1st. If OmiseGo is actually able to pull this off and create Plasma, we will see a very different market by December of this year. But yeah, it's very nice to hear that they are still active, still working around. Partnership is kind of cool. One of the also main things, a lot of people don't understand that OmiseGo is not just another token like a lot of the other projects. It's not just that. They actually are trying to literally build, if they can, the world's largest decentralized exchange, because they want people to completely move away from the exchanges that we have right now in order to, they want crypto to be its own sphere. You know, we are in the cryptocurrency space, but they want the crypto world to be not contained, but they want to make sure that we don't have to dive into the other traditional markets or into the other banking system or anything like that. They want it to be its kind of own space. Very ambitious project. I hope that they actually end up get it going and or moving. As of now, they have not changed their timeline for everything that they have going. So let's see, or let's hope that they end up advancing the cryptocurrency space like they said that they are able to do. Next up, this one is interesting, but I guess not as surprising as many people would think. The hash rate securing the Bitcoin network continues to soar, surging to over 40, I think it's exahash, if I'm not mistaken, 40 exahash in June 2018, despite several months of downward pressure on Bitcoin prices. Current hash rate is now well over double the 2017 peak of around 13 exahash, or to frame it differently, hash rate has increased by over 100% across 4 months. Such growth is certainly impressive, but must present something of a challenge to any companies operating within the mining sector, as continuous reinvestment becomes necessary in order to remain competitive and ensure a degree of profitability in the medium term. This is why I said and made that video. I think a lot of people weren't too excited when I said that Bitcoin will definitely be 51% controlled. I'm going to show you some graphs in a little bit, and it'll kind of explain a little bit why I had my idea, and I kind of want to not prove to you guys, but show you exactly what I was talking about. This is why Bitmain will definitely control 51% of the market, or 51% of the Bitcoin network, as it were. It is very difficult to continue mining Bitcoin. You cannot do this on your computer. You cannot do this on your phone. It's very difficult. So the only companies that are going to come out in front are the ones who are actually able to reinvest their hundreds of millions of dollars that they're making into more computing systems, because it is, if this is, I'm going to show you the charts, and this is going to kind of show you exactly, if this is where we were from 2017 to 2018, where we are right now, put it into context where we're going to be around 2022. The impressive surge in Bitcoin prices in the final months of 2017 will have pushed up mining profitability, and historically, price appreciation tends to be followed by deployment of additional hash rate. However, the inelastic, that's probably wrong, nature of setting up and turning out new ASIC mining equipment tends to result in a delay between rising Bitcoin prices and any resultant climb in hash rate. This is due to the time required to set up new facilities, especially as mining profitability tends to hinge upon miners obtaining rock bottom electricity deals which are only available in certain locations. So this is a graph of the hash rate. This right here, for those who can read it, I tried to make the screen as big as possible, or rather, maximize it. This says August 2017. And this is July 2018, so you can see that there's a bit of a stretch. If you look at, I tried to find other graphs that show like the complete, not only hash rate, but difficulty that has been rising in the Bitcoin network. And it's kind of difficult to find them because they tend to only have like a year and a half of the the monthly trends of stuff like that. It's actually kind of scary when you see exactly how rapidly this is growing. To put the scale of growth into perspective, the hash rate that has come online since the end of 2017 is roughly equivalent to around 2 million top of the range SHA-256 ASIC units, a figure which greatly exceeds estimates for the number of these units in circulation, with the units listed online for the range of around $1,800. Even with bulk discounts liberally applied, this represents over $4 billion with a B, dollars worth of additional mining equipment used to secure the Bitcoin network. Kind of see where I'm going with this. This is why Bitmain and the other slices of pie, it's not that they are small companies, so they're definitely going to do very well, but in order, you need $4 billion worth of additional equipment to secure the Bitcoin network. No average Joe has this money lying around. This is why when I made the other video and I was talking about the other crypto company, I can't remember the name at the moment, the one who mined at least 800,000 Bitcoin, and Bitmain, who had at least 500,000 Bitcoin that they had mined. That's not even talking about the Ethereum that they're also mining. They may sell a small portion of this. They are getting funding. I think there was also news that I don't have in this video as well, that Bitmain, I believe, recently received $12 billion in funding or something ridiculous like that. That's only going into more facilities, and this is why I always look at the math. You may use your emotions to think how something is going to turn out, especially when it comes to Bitcoin. Bitcoin is all about the money. This is kind of how it is, but it's staggering to see exactly how rapidly this is all moving. It continues on. Of course, this crude calculation doesn't take into account alternative sources of hash power from different ASIC setups, such as the all-in-one block box, never heard of it, shipping container units from Bitfury. These units utilize Bitfury's proprietary ASIC technology and advertise capabilities in the order of 8 petahash, 8,000 terahashes per container, with a rumored price tag of $1 million. Such a setup would likely be out of the range of all but the most well-capitalized mining operations. This is actually a chart of, so the Bitcoin difficulty chart. Bitcoin difficulty has raised by 8.56% in the last 30 days. The last 90 days, it has risen by 52%. This is a chart that I tried to expand, and the largest that they make you do it is from January, but you can still see this incremental increase. And this is with the Bitcoin prices going down. I want everyone to literally stop and think about that. I told you guys before, I said this is one of the main reasons why I stay in the cryptocurrency space, is because I look at the larger trends that are going on. Universities talking about the crypto prices going up to this, or this is going to happen within 10 years, and people from the banking sector getting into cryptocurrencies. In any logical other world, why would people be dumping billions of dollars into a market that is going down? Why would the difficulty shows that more people are creating these mining operations in order to mine more Bitcoin. This is why I find the drop in the Bitcoin price, I want to say at this point, it's hilarious. We've all lost money. This is why I can say it's hilarious. But you have to think of how weird that it is that, can you imagine people continuously investing into a stock or into a company that's stock or value lost around 70% of its value? None of it kind of, I mean, it all makes sense in the longer term, but it's kind of something very interesting to think about. This is also another chart. The red line that you see over here being the difficulty. This is one of the only few that I was able to find over the last 9 months. Even that was kind of difficult to find. The increase in it from the end of December 2018, how much it has grown with the price of Bitcoin going down. This is what, if tons of people are continuing to buy Bitcoin even as the prices are going down, the difficulty is slowly going up, and there are more mining operations, and there's more things about custody, more things about institutional investors who are slowly getting into the market. And this is kind of the result of, this is the market going up from July to December. And from this line right here, this is the market going down with the hash rate increasing and the difficulty of the mining system going up as well. It's all kind of interesting. You can use these charts to kind of speculate as to what's going on. This is why I have a lot of hope for the future of the cryptocurrency space. Not even talking about 2020 when the Bitcoin reward gets cut in half. That is going to be its own event in itself. I'm sure people are actually going to be throwing parties. I'm not even joking. There are a lot of like live stream events and all these other things that end up happening when other coins end up launching. But yeah, just something to think about. I wanted to expand on this a little bit more, but I think I've kind of said everything that I needed to say. I don't really have to dive a lot deeper into all of this. Something is happening. I think there is a great hope for the cryptocurrency space, even though it may not seem like it at the moment. There's still a lot of interest in this space, and it actually has, there was someone who was, it wasn't Bloomberg, it was one of the larger end magazine website companies who were talking about the actual graph showing the interest in the cryptocurrency space, not so much into Bitcoin directly, but I think it's actually like, 30 times what it even was last year. So a lot of people think that I've heard many times that the crypto market is dead and no one wants to get into the crypto market. Bitcoin is dead. I've read the comments as well. I kind of chuckle at them when I see some of them. But there's more interest in the market and the cryptocurrency space now than there was at the peak of the prices kind of going back up. I don't know. Just something to think about. Something that I think about when I have nothing else to do. Hope you guys enjoyed. Hope you guys are having a great morning, afternoon, evening. Wherever you are, wherever you might be, I hope it's amazing. Hope you guys are having a wonderful week. I think the week just started. I'm not really sure. I don't know what else to say. I'm always rubbish at ending these. Thank you once again for all your support, and I will talk to you all soon. See you.